Okay, 2016 A levels question number 20. One of the real flows in the circular flow model of income is, yes, what is, according to circular flow model, you have real flows and capital monetary flows, right? So let me quickly draw this. So uh, you have the households, you have the firms. The households provide what? Land, labor, capital, and entrepreneurs. What is this? Households providing land, labor, capital, entrepreneurship to firms. Real or a monetary flow? This is a real flow. In return for this land, labor, capital, entrepreneurship, firms pay them what? Rent, wages, interest, and profit. What is this? This payment of rent, wages, interest, profit? Yes, the factor income. That's a monetary flow. I'll put it with M. Okay. Then what do households do? With the money that they get, they spend, right? What did they do? They spend. There is expenditure on goods and services. This expenditure on goods and services is what? Monetary or real? It's a monetary flow. In return for spending on goods and services, what do firms do? Firms provide goods and services to households. So they provide the goods and services. This providing of goods and services is what? That's a real flow. I'm hoping you all remember that part. So then which one is the answer? They're asking for a real flow. The flow of goods and services going from firms to households. Flow of goods and services, correct. Firms to households, correct. Looks okay. Maybe that can be your answer. We look at the other ones. The flow of factor services going from firms to households. Flow of factor services is correct. But does factor services go from firms to households? No. Factor services go from households to firms. So therefore, this one is wrong. The flow of goods and services from households to firms, no. Goods and services don't go from households to firms, no. Goods and services go from firms to households. So therefore, wrong. Flow of money payments, no, those are all monetary payments. So 20 is answer number 1. Hoping that's okay. We'll move to the next. Question 21. Suppose in a given country, monetary flow, guys, is what you call money going, right? A financial flow. Anything other than a monetary flow is what you call a real flow. Now, for example, let's say, okay, we'll talk about these classes. Let's say it's a paid class. You pay me money. You pay me monthly, let's say, a fees for this past paper class. In return, I provide you a service. You paying the money is called the monetary flow. Me providing that service is called real flow. Okay, so real flows are anything except monetary flows. That's how you usually define it also. Okay. Then, but usually where to remember is real flows is where, you know, like a good or service or something is provided. That's not a real flow. So look at this. Suppose in a given country, general price levels has risen in the past year, okay? But production has remained constant. Based on this information, which of the following is correct? Very easy, guys. If you all know what is nominal and real GDP, answer is nothing. So production of goods and services have remained constant means what can you tell about the real GDP? If the production of goods and services have not changed, real GDP will remain constant. Why? Because real GDP is the GDP of the year measured based on constant prices. So if the price is also same, production is all same, real GDP should remain unchanged. Now, this is like in Sri Lanka now. In Sri Lanka in the year 2022, right, our output fell. Now, in 2022, guys, our nominal GDP is higher, right? So, nominal GDP or GDP at current prices might be high because inflation. Yeah, because of that. Now, see, in this question, where was that 2015? No, yeah. So this is GDP at current market. So if you take GDP at, let's say, base year prices or base year GDP at constant prices, it would be even lower than that. That 77 million is also because of high inflation. So be careful with those. Then Okay, what can you say, guys? So if the prices have gone up, but the output has remained constant, so then you say real GDP is constant. What can you tell about nominal GDP? Nominal GDP is price into output, right? So nominal GDP would have increased. There would have been an increase and a this thing. Which one is the answer then? Nominal GDP would have increased. Why? Because prices went up. Real GDP didn't really change because the output is constant. Guys, now for this, you need to know what is nominal and real. Now. That comes from your theory classes. So I'm not going to take that effort to put that into your head, I'm guessing. And by now, guys, if you're an economic student and you don't know nominal and real GDP, that means you have been doing almost nothing for the last 2 years. It's time to step up and do something great. New fall 2015 inflation, I'm not very sure, right? So I can't remember whether it was high or low. Okay. We go to 2022. Which of the following is included in the calculation of personal income, but not in national income? Now, yes, can you tell me this? When you go from gross national income, usually this is what you call national income. Okay. When you go to from national income, when you go to personal income, there are few things that you add, few things that you deduct. So what are the things that you add? If there is something that households are getting, but it is not in national income, you have to add those. Things like what? Things like, let's say transfers. Yeah. Transfers like pensions, right? Samurdi benefits. Okay. You will have to add those. Then what else? It's not in national income, but households get it. Maybe government interest expenditure, you can add. Net secondary income, you can add, like worker remittances and all. Secondary income, you can add. Anything else? Maybe any social security benefits, not social security contributions, social security benefits. You get money, right? Maybe you're reclaiming your EPF or ETF, something like that, right? Security benefits, right? So those kind of things you will add them. Why? Because these are part of personal income, but it's not there in national income. We don't put these when calculating GDP. Then there are some parts that is in national income that is not there in personal income. So those ones you minus. Can you tell me what do we minus? What are the things that we minus? From national income, it's there in national income, but it's not there in personal income. Employee compensation, no, that's not there, right? Depreciation, okay, that is, in other words, consumption of fixed capital. Not corporate profits, but retained profits, because corporate profits, part of it they get as dividends. It's the retained profits that they don't get. Okay, retained profits. Social security contribution, right? For example, like, you paying EPF, ETF, right? Contribution. Yes, you can say government property income. You don't adjust for income tax here itself. Net primary income received by households, right? Households receive, no problem. Then what else? Those are the main things, right? That you deduct from this. So remember, guys, this is the calculation. I'm just trying to recap the theory. Okay, but you go through your notes properly and see from national income, how do you go to personal income? So how do you go from a country's national income to an individual's personal income? There are few things in national income that is not there, but households get it. Now, for example, something like pensions. Pensions are transfers. No, we don't include that in national income. So therefore, you have to add that, right? When you're going to personal income, you have to add your pension, this one. All these you add. But there are some that is in national income, but households don't get it. Things like depreciation is there. Now, depreciation is not like an income for households. No. right? Retained profits are there. Social security contribution, like you paying EPF, ETF, government property income. Those households don't get, so those you minus. Then you can get personal income. Then how do you go from personal income to disposable personal income? How do you go from personal income to disposable personal income? What do you do? Here you will minus direct taxes, right? So direct taxes are what? These are what you call, if there are transfers also, you can add, yes. These are what you call income taxes. Right? So from personal income, if you minus direct tax, you end up with disposable personal income. So in this question, they are asking, which of the following is included in personal income, but not in national income? So what are they asking? In other words, they are asking something that we are adding, right? Included in personal income, but it's not in national income. That's why we add it. It's not in personal income, so we are adding it. It's not there in the national income, so we are adding it so that it will be there in personal income. Which one? Corporate dividends. Dividends are there in national income, right? So transfer payments, yes, that can be your answer, right? Transfer payments are what? Things like pensions and all of that. So pensions and all of it, we don't include in national income, but it's definitely a part of personal income because people earn that, right? Because some people live off their pension. So not included in national, included in personal income, but not in national income. This see. Now, social security contribution is something that you minus. Now, ideally, your answer should be something that you add. So here, no. Undistributed corporate profits is what you call retained profits. You minus. This net interest, we are not very sure. Is it now? If it is net interest paid by the government to households, you have to add. Then that's correct. But when you say net interest here, we are not saying. They are not saying that it's government interest. Maybe this must be the interest that firms are. Then you can ignore. Okay, that's a good MCQ that you all can learn something from. Is that okay? 2016 question number 22. Yeah. Questions, problems, issues. As I'm repeating, you all need to know the theory, okay? Otherwise, it becomes very hard. Otherwise, what I am talking about becomes complete nonsense, right? And you will not understand anything. Now, you all should have learned this somewhere else before so that it will be recapping and you all remember stuff. Okay. Right. So, how did you all do with the 2016 paper? There were 3 MCQs, 1, 2. I think 1 and 2 was easy. Third one was a little not that hard, but yeah. MCQs for unit number 6, all set. I think I should have it. Right. Good. So, we'll move to the next one.